everyone. Welcome to NIKE Inc.'s fiscal 2021 third quarter conference call. For those who want to reference today's press release, you'll find it at investors.nike.com. Leading today's call is Andy Muir, VP Investor Relations. Before I turn the call over to Ms. Muir, let me remind you that participants on this call will make forward-looking statements based on current expectations, and those statements are subject to certain risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are detailed in the reports filed with SEC, including the annual report filed on Form 10-K. Some forward-looking statements may concern expectations of future revenue growth or gross margin. In addition, participants may discuss non-GAAP financial measures, including references to constant dollar revenue. References to constant dollar revenue are intended to provide context as to the performance of the business, eliminating foreign exchange fluctuations. Participants may also make references to other non-public financial and statistical information and non-GAAP financial measures. To the extent non-public financial and statistical information is discussed, presentations of comparable GAAP measures and quantitative reconciliations will be made available at Nike's website, investors.nike.com. Now I'd like to turn the call over to Andy Muir, VP Investor Relations.
Thank you, operator. Hello, everyone, and thank you for joining us today to discuss NIKE Inc.'s fiscal 2021 third quarter results. As the operator indicated, participants on today's call may discuss non-GAAP financial measures. You will find the appropriate reconciliations in our press release, which was issued about an hour ago, or at our website, investors.nike.com. Joining us on today's call will be NIKE Inc. President and CEO, John Donahoe, and our Chief Financial Officer, Matt Friend. Following their prepared remarks, we will take your questions. We would like to allow as many of you to ask questions as possible in our allotted time, so we would appreciate you limiting your initial questions to one. In the event you have additional questions that are not covered by others, please feel free to re-queue and we will do our best to come back to you. Thanks for your cooperation on this. I'll now turn the call over to NIKE Inc. President and CEO, John Donahoe.
Thank you, Andy, and hello to everyone on today's call. First and foremost, like all companies around the world, we're pleased by the recent positive news of the vaccine rollout. We remain optimistic, though we're prepared to operate through continued volatility until the virus is fully contained. Our teams have proven their agility to operate through uncertainty while also staying focused on the long term, and we once again demonstrated that agility in Q3. It's why I wouldn't trade our position with anyone. The power of Nike is our consistency and the strength of our global portfolio. Throughout the pandemic, we have stayed focused on our unique advantages, and we've been resolute in fueling innovation, and our brand is as strong as ever. I'm proud of our results this quarter. Q3 saw us continue to deliver consumers new products, new campaigns, the energy from our roster of athletes, and more. Our strategy puts the member at the center and keeps us in the lead, and we will continue to drive even further competitive separation. And still, we push our own expectations of ourselves. Last week, we released our 2020 Impact Report and announced our new 2025 purpose targets. Our new 5-year purpose targets offer a roadmap to 2025, outlining clear goals, action plans, and accountability. And for the first time, that accountability now includes linking executive compensation to our purpose goals. Our 2025 targets will keep us focused on accelerating our efforts against a wide range of priorities, from sustainability to representation to investing in the future of sport in communities around the world. I encourage everyone to take a look at the report at purpose.nike.com. Ultimately, this isn't just the right thing to do. It makes great business sense. Setting purpose targets for ourselves creates long-term value, raises the bar for our industry, and redefines our own potential for positive impact in the world. Our commitment to constant improvement is why I continue to be so amazed by this team. I have never been more confident in our leadership and teams around the world as we stay on the offense, accelerating our long-term strategy. And as I said, this continues to be a dynamic external environment, but I'm proud how adaptable Nike is. No matter what happens, COVID spikes, forcing store closures, port congestion on the West Coast, and more, this team responds with solutions. We adjust and we win. Our brand continues to deeply connect all over the world. We remain consumers' #1 favorite brand in all 12 of our key cities in both men's and women's businesses. We're also seeing particularly strong connections in Greater China, where our strong portfolio of brands, including Jordan and Converse, is helping to extend our leadership position. All over the world, the relationships we have with consumers cannot easily be replicated. Our brand differentiates us, driven by the unique competitive advantages that we enjoy. First, Nike's connections with consumers are driven by sport and cultural authenticity. Our roster of athletes is the greatest in the world. Naomi Osaka continues to emerge as a truly global sport icon, having won 4 Grand Slam titles at only 23 years old. Kylian Mbappe became the youngest footballer ever to score 25 Champions League goals, leading Paris Saint-Germain into the quarterfinals. The NBA All-Star Game was proof yet again of our dominance in basketball, with LeBron's team taking on KD's, Giannis winning MVP, and a young core of Jordan brand superstars led by Zion and Luka. And the energy of March Madness tips off today, with Jordan and Nike schools making up 10 of the top 16 women's teams and 15 of the top 16 men's teams. No brand connects with consumers with the power and culture of sport like Nike, and we pride ourselves on our leadership role to drive hope and inspiration all over the world. Second, our brand is powered by our global scale. This is particularly critical advantage as we continue to fuel our digital transformation. We've had tremendous success in digital, quickly pivoting to serve consumers as they shift to digital channels. But even as this consumer shift is felt across industries, Nike's digital transformation remains a unique advantage. Scale matters. The strength of our brand allows us to stay personal at scale with consumers in all of our geographies. And more than ever, the portfolio effect of being a truly global brand is powerful. Third, we stay at the front of the pack thanks to our compelling consumer experiences. Last quarter, we announced the launch of Sneakers Live, our first product drop via live streaming. In Q3, we doubled the number of countries with live streaming, adding Japan, Germany, and Italy. We're seeing phenomenal engagement for this live interaction, with average viewing duration doubling to over 15 minutes. I wish it were 15 years. Well above the industry norms. We're also creating content to connect members to the sport and sneaker community, content that drives the highest engagement on sneakers. So whether it's through the Sneakers app, our activity apps, platforms like TikTok, and more, we continue to find compelling ways to deliver an authentic Nike experience in digital. And fourth, the Jordan brand had a very strong quarter, growing double digits in Q3. This growth was broad-based led by our biggest growth opportunities: digital, international, apparel, and women's. In fact, Jordan's women's business was up nearly triple digits, a strong statement of how the brand continues to serve a broader set of consumers. Q3 also saw the launch of the Air Jordan 11 Jubilee, one of the largest and most successful footwear launches ever, with more than $175 million in revenue. We're incredibly confident about the continued growth opportunity for the Jordan brand moving forward. As always, our brand is propelled by our unmatched innovation, investment, and pipeline. Innovation's at our core, reflecting not just our foundational values, but the values we share with consumers. We don't just innovate for the elite athlete. We use innovation and design to solve problems for all consumers, no matter their sport or style of play. And we consistently bring fresh, new product to market, supported by compelling storytelling that helps drive consumer demand. At the core of our innovation engine is our edge in performance. And we continue to use this edge to evolve some of the most popular products for everyday runners. This quarter, we focused on a key problem for runners with new footwear that continues our mission to unlock injury prevention. The Zoom 10 Invincible Run offers a brand new look for Nike running with increased foam in the midsole. This creates a soft ride that makes running feel easy with incredible energy return and is designed to help reduce running-related injuries. We also just launched the React Escape, a shoe specifically designed for the female runner. The React Escape's silhouette, materials, and design details are all aimed at new runners, and it's seeing great sell-through as it encourages more women to pick up the sport. We're also driving our sustainability agenda through strong product innovation. We've set ambitious goals around the use of sustainable materials throughout our line, and will continue to invest in new materials and methods of make to maintain our leadership position here. Last month, we launched Cosmic Unity, our first performance shoe under our Move to Zero initiative. This initiative, which moves us toward zero waste and zero carbon, embraces circular design as a guiding principle. Cosmic Unity, which has also already been worn on court by some of the NBA's best, including Anthony Davis, is Nike's first performance shoe made out of at least 25% recycled content by weight, and offers just a hint of our future with sustainable product. We're also resolute in our pursuit of making sport a daily habit for all athletes. A great example of this work is the Nike Go Fly-Ease. Its easy on, easy off design solves for an ambitious North Star: the creation of a truly hands-free shoe. This is a shoe for everyone, from elite athletes to parents with their hands full. We're initially launching Nike Go Fly-Ease first for our most engaged members, with broader consumer availability coming later this year. And we continue to push our industry in creating product through better consumer insights. This quarter, we acquired Datalog, a data integration platform that will help us process, analyze, and act on the data we enjoy thanks to our scale advantage. This lets us harness the full power of our data, turning it into more actionable insights and enabling greater speed. As part of our recent organizational realignment, we also put our data teams alongside the creative teams to unlock this opportunity. Nike has always married the art and science of product creation, and the move toward deeper and more dynamic insights along with our talent and investments in data science and machine learning, creates a capacity that no other brand has. Let's quickly talk about the Tokyo Olympics and Paralympics. Despite the unique circumstances surrounding the Games, we look forward to leveraging that world stage to showcase our innovation and purpose commitments. Our pipeline and cadence has continued its pace, including some new innovations and the scaling of a few of our recent innovation platforms. This summer in Tokyo, we look forward to sharing the next generation of FlyEase and its mission of inclusive innovation, as well as delivering some new and exciting women-specific innovations. The last thing I'd like to discuss is digital. We're taking even greater advantage of our vast digital opportunity as we create the future of retail. We know that our consumers want a consistent, seamless, and premium experience. And so alongside our strategic partners, we continue to consolidate the marketplace to give our consumers that premium experience. Our owned digital business is thriving, with growth of 54% on a currency-neutral basis during the quarter. This growth was led by North America, which had its first ever quarter with $1 billion in digital revenue. As you know, we set a bold vision for digital across owned and operated and partnered, being 50% of our business in the long term. We have made significant progress to date, increasing the digital mix of our business by more than 10 points in Q3 versus the prior year. Nike's ability to sustainably grow digital for the long term is rooted in our member connections and compelling experiences that only Nike can offer. And our members are more engaged than ever, with an over 60% increase in monthly engaged users for the quarter, led by our sneakers app, where we're seeing 4 times the engagement in monthly active users versus last year. This heightened engagement is translating into buying. We're seeing continued member growth outpace total digital growth as buying members increased 80% versus the prior year. And these connections extend beyond digital. In our own stores, member demand penetration rates are seeing meaningful increases, enabled by robust store training programs, member-specific promotions, and enhanced account linking capabilities. This is critical as we strategically focus on better serving and driving repeat engagement with active, high-value members across all of our channels. In the end, Nike is staying on offense, and we're focused on extending our leadership position. We have a proven playbook led by digital, and everything we've seen makes us more confident in our future. Our focus is on the long term, and we're not slowing down. And with that, I'll turn the call over to Matt.
Thank you, John, and hello to everyone on the call. As we've entered into a new calendar year filled with new opportunities amidst pandemic-related challenges, our focus has not wavered. We continue to position Nike to win today and over the long term. We are now 1 year into managing through these dynamics, and we have met every hurdle with leadership and decisive action. While we are optimistic about the pace of vaccine distribution and how this will enable safe reopening of the global economy in the near future, the effects of the virus continue to create short-term volatility in our business performance. For example, in Q3, disruption in the global supply chain due to container shortages, transportation delays, and port congestion has interrupted the flow of inventory supply. The result has been supply shortages relative to continued strong marketplace demand. In North America specifically, inventory supply was delayed by more than 3 weeks, impacting the timing of wholesale shipments and growth in the quarter. In EMEA, Additional COVID-related lockdowns caused a higher number of physical retail stores to be closed and or operate on reduced hours versus the prior quarter. But our operating priorities remain unchanged, and we're focused on what we can control. Optimize marketplace supply and demand with speed and agility, accelerate the pace of direct connections with consumers, and exert our financial strength to move faster towards our long-term strategic vision of the consumer direct acceleration. I am proud of how our teams continue to respond, demonstrating how to win in a dynamic and rapidly changing environment. And our results reflect our team's unwavering commitment to serving our consumers. John couldn't have said it any better. We adjust and we win. This is the mentality that will propel us forward as we focus on the future. Now, as I reflect on the third quarter, I want to highlight two important points. First, Nike's brand momentum is as strong as ever, and we are driving focused growth in our largest opportunities. Our innovation and product franchises are resonating with consumers. This translated into double-digit retail sales growth over the holiday season. We drove a higher proportion of full-price sales with lower markdown activity. And this retail momentum has continued into the spring season. At our core, Nike is a growth company, and we delivered another strong quarter of performance against our largest long-term growth opportunities. Greater China set the pace for our geographies, growing revenue 42% on a currency-neutral basis. We set another record for Chinese New Year, with digital demand doubling versus fiscal 19. Nike Digital grew 54%, led by strong growth across our mobile app ecosystem. Demand on the Nike app grew 90% versus the prior year. Women's drove over-indexing revenue growth for the quarter, including nearly 90% growth in Nike Digital. And with high double-digit retail sales growth across the marketplace, we are increasing Nike's market share across our key markets. And last, the Jordan brand grew 15%, delivering its third consecutive quarter of double-digit growth with incredible brand momentum and a clear formula of growth for the future. We are exceeding pre-pandemic levels of business, and our brand momentum is clear. From our relentless flow of new product and storytelling to our deep consumer connections, our extensive portfolio of athletes and teams, and the scale of our digital platforms, Nike's positioned to drive high-quality, sustainable, and profitable growth across our portfolio. Second, this quarter demonstrated how a more direct, digitally enabled Nike will fuel long-term strategic and financial value. Our consumer direct acceleration strategy is driving a meaningful and broader marketplace shift, and it is transforming our financial model. Our own digital business has grown more than 70% year to date, and our mix of owned and partner digital now exceeds 35% of our total business. This quarter, we increased member buying frequency and grew retained buying members versus the prior year and the prior quarter. Looking ahead to fiscal 22 and beyond, we expect digital to continue to be our fastest growing marketplace channel, with digital mix increasing towards our 50% vision. Nike physical stores are another key enabler to drive our consumer direct acceleration, and our monobrand store expansion strategy creates an incremental market opportunity for Nike. New retail concepts, such as Live, Rise, and Unite, will create distinctive, authentic, and premium Nike consumer experiences in the marketplace. They will accelerate Nike member acquisition at scale while unlocking higher retail productivity. They will recapture displaced consumer demand as we restructure the wholesale marketplace with our strategic partners. And most importantly, they will accelerate Nike digital growth by scaling online to offline capabilities as our physical presence reaches a greater number of consumers. A great example of this are the two new Nike Live concepts we opened in Greater China this quarter, where member checkout rates reached 90%, paving the way for connected member journeys and member-led digital growth. We look forward to scaling these new retail concepts into fiscal 22. As I've said before, this strategic shift to increasingly direct and personalized connections with consumers unlocks strategic and financial opportunity for Nike. This quarter, Nike direct gross margins contributed to our overall gross margin expansion of 130 basis points, being fueled by a higher mix of digital, which carries a higher gross margin rate, as well as optimization of new pricing capabilities using advanced analytics in North America. We are also continuing to test and learn within our full funnel digital marketing activities, and our pace of learning is accelerating with so much opportunity ahead. During Q3 in North America, we leveraged data to identify consumer cohorts and feature personalized product recommendations to members to both activate members who have never purchased and increase repeat purchasing. We expect Datalog to amplify our speed in analyzing consumer data and inform product, marketing, and service recommendations, ultimately increasing member buying frequency, basket size, and member retention rates. It is clear that our shift to a more direct, member-centric business is beginning to drive strategic and financial value for Nike, and we are confident we are making the right investments in the areas that matter most. Now let's turn to the details of our third quarter financial results and operating segment performance. NIKE Inc. revenue grew 3% in Q3, declining 1% on a currency-neutral basis, as Nike Direct grew 16%, led by strong Nike Digital growth, offset by declines in our wholesale business due to the timing of wholesale shipments caused by global supply chain challenges in North America and mandatory store closures in EMEA. Gross margin increased 130 basis points versus the prior year, resulting from higher full-price product margins, due in part to geography mix and favorable Nike Digital mix, partially offset by lower Nike Direct rate as we continue to manage inventory levels due to COVID-19, as well as foreign exchange headwinds. SG&A declined 7% in the quarter as we shifted certain demand creation initiatives to better align our investments with product delivery timelines and market conditions, along with lower operating overhead due primarily to lower wage-related costs versus the prior year and continued expense management. Our effective tax rate for the quarter was 11.4%, compared to 3.9% for the same period last year, due to decreased benefits from discrete items and a shift in earnings mix, in part due to the impact of the COVID-19 pandemic. Third quarter diluted earnings per share was 90 cents, up 70% versus the prior year. As a reminder, prior year EPS included a 25-cent non-cash FX-related charge associated with the planned transition to a strategic distributor model in South America. With that, let's turn to our operating segments. In North America, Q3 revenue declined 11% on a currency-neutral basis, and EBIT increased 4% on a reported basis. We saw strong retail sales growth over the holiday season and drove clean marketplace inventory due to our first half supply and demand management actions. However, starting in late December, container shortages and West Coast port congestion began to increase the transit times of inventory supply by more than 3 weeks. The result was a lack of available supply, delayed shipments to wholesale partners, and lower than expected quarterly revenue growth. We expect to capture this delayed revenue in the fourth quarter. Nike Direct, however, grew 15% on a currency-neutral basis, led by Nike Digital growth of more than 50%, and we have seen this momentum continue into March. This quarter, we accelerated analytics capabilities to dynamically adjust pricing and fulfillment alternatives as we balance consumer demand, inventory availability, and profitability. We also prioritized available product supply to Nike Direct and our strategic partners. Inventory in North America grew 31% versus the prior year, with extraordinarily high levels of in-transit inventory due to increased transit times. Inventory units in our distribution centers declined nearly 20%. With strong consumer demand continuing through the spring season and marketplace inventory down high double digits versus the prior year, we expect continued full price momentum, despite the short-term supply disruption and elevated levels of in-transit inventory related to ongoing global supply chain dynamics. In EMEA, Q3 revenue declined 9% on a currency-neutral basis, and EBIT declined 7% on a reported basis. Across most countries in Western Europe, government restrictions caused an acceleration of store closures, with approximately 45% of our Nike-owned stores closed over the last 2 months of the quarter. We have leveraged our supply and demand playbook, and specifically Express Lane, to recalibrate marketplace inventory. Excess inventory in EMEA is manageable and lower than during the first wave of lockdowns. Assuming lockdown restrictions begin to ease by mid-April, we expect EMEA inventory to be normalized in the first quarter of fiscal 22. As of today, approximately 35% of our Nike-owned stores are closed, and this situation continues to be dynamic. But in markets where our stores have reopened, we are seeing strong consumer response and continued brand momentum, with higher conversion rates and strong comp sales growth versus year over year, complementing strong digital growth. With Nike-owned and partner stores mostly closed, we leveraged the strength of our Nike digital business, which grew 60% on a currency-neutral basis, led by the Nike app, which grew triple digits in the quarter. And Nike digital demand has continued to grow triple digits in March. With that, let's turn to Greater China, which achieved its second consecutive $2 billion quarter and grew 42% on a currency-neutral basis, with EBIT growth of 75% on a reported basis. Nike Direct grew 52% versus the prior year, with more than 40% growth in digital and nearly 60% growth in Nike-owned stores, as the retail market largely returned to normal, including strong double-digit growth in partner retail stores, widening our market lead as the favorite brand with consumers. As I mentioned earlier, Chinese New Year was a key highlight, and through our Express Lane offense, we created and delivered hyper-local products to celebrate the moment, including the Dunk Low and the Women's Dunk Disrupt, which both instantly sold out. Our women's business grew more than 60% versus the prior year, and our 2 new Nike Live stores are resonating deeply with her since opening. In digital, we focused on engaging and serving members across multiple platforms, including live stream and social media. During Chinese New Year, we doubled our number of high-value members, while also increasing member retention. We're excited by the opportunity we see ahead, and so we are accelerating investment in Greater China, including in the local consumer digital experience, new retail concepts, and omni-channel integration with our owned and partner stores. Finally, in our APLA geography, Q3 revenue declined 8% on a currency-neutral basis and was temporarily impacted by the transition of our business in Brazil to a strategic distributor model, partially offset by continued strength in South Korea and Pacific. And Q3 EBIT grew 5% versus the prior year on a reported basis. Nike Digital grew nearly 70% on a currency-neutral basis, and we focused on member engagement and the scaling of consumer services like Member Days. In Japan, we drove record weeks of member buying, launched our interactive live streaming on sneakers, and activated new O2O capabilities. In Mexico, we more than doubled our digital growth, and we plan to launch the Nike mobile app in the first half of fiscal 22. I will now turn to our financial outlook. This past year has been one of the most dynamic operating environments in our history, and Q3 was no exception. Despite these continued challenges, we remained focused on serving the consumer while making clear operating decisions with speed and agility. We can see the near-term operating environment with increasing clarity, yet we remain focused on what's required to win for the long term. With that in mind, we are now more confident in our full-year outlook for revenue and expect low to mid-teens growth versus the prior year. Specifically for Q4, in our least comparable quarter of the fiscal year, we expect revenue growth of roughly 75% versus the prior year. This reflects government-mandated restrictions in Europe starting to ease in April and inventory transit times slowly improving in North America. We now expect gross margin to expand up to 75 basis points versus the prior year, reflecting the continued shifts we've seen to our more profitable Nike Direct business, partially offset by higher logistics and freight costs and higher markdowns to liquidate excess inventory in EMEA. Foreign exchange is now estimated to be a roughly 35 basis point headwind on the full year. We expect SG&A dollars will be slightly up versus the prior year as we rebuild investment levels in demand creation towards pre-pandemic levels and continue to invest to accelerate the pace of our digital transformation. We expect our effective tax rate to be in the low to mid-teens for the full year. And finally, we will resume moderate levels of share repurchase beginning in the fourth quarter. We are confident in our outlook for strong free cash flow growth, which enables us to accelerate capital returns while making the necessary investments to enable our consumer direct acceleration. Looking ahead to fiscal 22, as I said earlier, we are already exceeding our pre-pandemic levels of business, and I expect the momentum we are seeing to translate into continued strong revenue growth. I will provide more specific guidance for fiscal 22 on our next earnings call. As a growth company, our offense is working. Nike's brand momentum is as strong as ever. Our product is resonating, the pipeline is strong, and our brands are more deeply connected to consumers than ever before. The pace of our digital transformation is also accelerating, and we are investing against the large market opportunity we see. We are converting more consumers into members and connecting more deeply, more frequently, and more meaningfully via our digital platforms, and ultimately also through our One Nike Marketplace strategic partners. My optimism for Nike's long-term potential has never been higher. And so with that, let's open up the call for questions.
Ladies and gentlemen, as a reminder, to queue for a question,